Boy, check out this number. The average interest rate on a 30-year fixed mortgage in the U.S., 4.12%. That is the lowest in at least 40 years.
But the trick is, not everyone can get a loan at that rate. And CBS News business and economics correspondent Rebecca Jarvis here to give you a better chance at actually getting in on some of these great numbers right now. Good morning, Rebecca.
Good morning.
So how big a difference? Well, let's talk about, for the people that have rates right now that are in the fives, to be able to get in now at 4.12, just kind of spell it out from a financial interest, exactly how much they can save month to month.
It is pretty significant on a month-to-month basis, and then when you look at it on a yearly basis, it's even more significant. Back in November of 2008, mortgage rates were about 6%. So if you take a $150,000 mortgage and you look at what you would be spending on that mortgage on a month-to-month basis at 6%, $899, so almost $900. Refinance it to today's rates, and you're paying $726 a month. That's a savings of about $173 a month. And then on a yearly basis, we're talking about more than $2,000 in savings if you go with today's rates.
So that could be great if you refinance. But there are also a number of things you need to look at to make sure that refinancing is actually going to pay off in the end for you.
Right. And not only do you have to look at these factors to see if it pays off, but you also have to look at them to see if you might be eligible to refinance in the first place. Number one, great rule of thumb is if your previous interest rate is more than 1% higher than what today's rates are, then you would be a good candidate for refinancing. So at least 1% less would have to be today's interest rate. So let's say you're above 5.12%. Well, that makes sense for you to refinance at today's rates. Also, closing costs. These can be in excess of a couple $1,000s. So you want to make sure that the closing costs that you're going to have to pay on the new loan aren't going to exceed the benefit of getting that new loan over time. Also, lender fees. A number of lenders charge fees, and those fees tend to rise when your credit score is lower. That credit score is going to be significant. What is it? It needs to be above 700 to get the best deals today.
Let's say you do want to get in and you want to take advantage of these low rates right now. How do you go about qualifying?
Well, first of all, you need that credit score. Like we said, above 700 is important. So you want to make sure that you're paying your bills on time, that you're keeping your credit cards open. That's a big mistake people make. They close out their credit cards once they pay them off. Keep them open. And then also that down payment is very significant. 20% of the home value is oftentimes what they're looking for, and you want to make sure that you're saving in a side account for that 20% down payment. It's a good thing to do, and you can also use a mortgage calculator at rates like at sites like Zillow and Bankrate.com to figure out how much you're going to owe.
All right, CBS's
Rebecca
Jarvis.
Guys.
Thanks so much.